Hello and welcome to yet another quick video. Its purpose is to prepare you for the sessions ahead, possibly lasting all the way to the new year, depending on your trading style, because you know that I cover both swing trading and intraday trading, whether it comes to equities or real assets. So let's jump into this premium chart that I presented to clients on the weekend. As you can see, the market breadth characteristics are not exactly appealing, but all the bearish divergences can keep on dragging for quite some time, and you know what it said about the almost 45 degrees angle buying that you had seen since the post-election correction ran its course rather sharply mid-November. It's institutions buying, and rotations likewise are the health of the bull market. So it would be quite premature to call for an end or to call for a short swing position initiation, considering what I see sectorally. It's been well known right after the elections that I identified the dollar, cryptos, and select pockets, including within tech, such as IGV, as the key beneficiaries. We are starting to see the budding signs of semiconductors coming back, and SMCI is slowly improving. Communications and discretionaries are leading. The retail space is doing well. Financials, for all the correction last week, some 2.5–3% of the highs, that's pretty much nothing. And with looming deregulation, when you hear noises about Dodd-Frank, adjustments, repeal, whatever, being floated, that bodes well for the banking sector. So, what do I see ahead? We see, as befits presidential year elections, quite a tame Santa Claus rally, but it's orderly and quite reliable. And as for the nearest earnings and fundamentals that would shake the tech space and risk appetite in general, I would pick Oracle. Friday had been a very good example of rate cuts going up, even if jobs data are hot, especially the prior revisions, which we haven't seen for quite many quarters. Bullish revisions, positive revisions in the prior establishment data. On the other side of the coin, disinflation is slowly ending. This is no surprise to my loyal long-term readers, because it's so important to keep the pulse on both fundamentals, the macro landscape, and what are the defining factors still this year when it comes to data. CPI and PPI this week, followed by retail sales, and finally FOMC. Of course, that influences the swing and intraday trading strategies. Swing ones, well, what do we want to sweat on this long and orderly upswing? Dips are to be bought, and it depends upon your availability and availability to execute fast, whether you want to take advantage of a dozen or two discounted entry when it comes to the ES contract or not, and how active you want to be in selecting various sectors. Let's move to this crude oil chart, where we are seeing a reasonably strong long-term support ever since the early part of September being approached, and the daily indicators are a little bit tired, so as I have made public already on the weekend, I'm not looking for a quick break to the downside of this range, and at the same time commodities are still behaving quite tame, whether it is base metals, whether it is this energy chart. And the best performing parts of the commodities space are agri-foods. Still, these are agri-foods. And it also fits a seasonality within this sector. When it comes to gold, I'm more cautious about its appreciation. I would rather pick copper and silver as the relatively better parts of the metals space. Miners are still no-go, they are underperforming, and this has been in the big picture the case ever since their peak in the mid-2000s, when they had stopped outperforming the metals themselves. So this is the quick introduction into real assets that have not yet regained their spark. Crypto keeps still in the spotlight, and there are many, whether Bitcoin, whether Ethereum or other coins, that can be picked for profitable plays, and this is the latest kind of an enrichment within the option number 3 when it comes to the intraday channel, strictly intraday opportunities and real-time commentary to data, but swing traders, depending on their scope of assets, whether that includes real assets, which are offering decent opportunities as well, or only equities, that's the options number 1 and number 2, so treat yourself to an advantage and join for proper perspectives as to what is the driving big picture force behind the markets, instead of fishing for every opportunity in intraday terms only. Both areas are ideally complemented. You know me pretty well, beware of impersonators, and I will be gladly talking to every one of you who reaches out. Obligatory disclaimer, and wishing you a fine day.